Welcome to our daily top 5 gainers and top 5 losers analysis. My name is JZ De Guzman, founder and chief technical analyst for Equilist Analytics Incorporated. So today I'm going to discuss the top 5 gainers and the top 5 losers as of February 27, 2019. The top 5 gainers that I'm going to talk about are the following: Green, House, STR, HVN, and IMI. Now for the top 5 losers, I'll be discussing TEL, EEI, SMC, GTCAP, and PHA. So let's start it off with the first of the 5 top gainers as of February 27, 2019. So we have green on the chart. So let me plot the immediate support and resistance levels of green. So from here, for those who would like to know what I'm clicking for me to be able to plot some horizontal lines, I just click on this menu here, this icon, then I click on the horizontal line. And then there's a setting here whereby you can change the color of the line and the thickness of the line as well. Okay. For you to draw another horizontal line, you will have to click on that horizontal line icon to the left. Okay, so I have plotted 4 horizontal lines, and this is where I think the immediate and the major support and resistance lines are. Okay, so for green, the major support now stands at 2.90, while the acting resistance is pegged at 3.50 or 3.51. Now, since we want to see what's ahead of the resistance line at 3.50, what I'm going to do now is that I'm going to plot a Fibonacci extension. Okay, you're not going to see the word extension in here. You will see Fibonacci retracement, but there's no Fibonacci extension. So what we're going to do then is that we're going to reverse the Fibonacci retracement to make it a Fibonacci extension. And I'll show you how to do that. You will have to check again on the left-hand side, on the left sidebar of the trading view using First Metrosec Pro's platform. So you will check on this icon, the pitchfork icon, but that's not what we're going to use. We're going to use Fibonacci retracement, this one. Okay. So you will have to check the starting and ending point. So in this case, I'm not going to choose 0.39 as the starting point because that's so quote unquote historical already. So we would like to consider relatively new data as a basis for the Fibonacci retracement. So without going as far as 0.36 to 0.39 way back May 2015, I would rather choose this one, this opening price at 2.42 last January 31, 2019. It's more recent. Well, of course, it's more recent than 2015. Okay. So let's plot it here. Or you can also choose this one, last February 27, 2018. The opening price, last February 27, 2018. But in this case, I'd like to use most recent data as my basis for my Fibonacci extension. Okay, so let's use that one. That's February 26. Okay, and then I'm going to plot it at 3.50. Okay, now this is now a Fibonacci retracement. So if we're going to look what's above 3.50, we're not going to see yet a line up there. Meaning to say we need to reverse this Fibonacci retracement so it will plot the Fibonacci extension lines. And how do we reverse it? Of course, you will have to click on the Fibonacci retracement that we have plotted. And then you click on the settings here. Left click. And then you will see here reverse. Okay, just check that box. Click OK. And then let's not show the background so that it will be, you know, relatively cleaner. Okay. Okay, there you go. So now our psychological resistance, not historical, but psychological resistance is now positioned near 4.50. Okay, that's the 161.8%, the 61.8% Fibonacci extension. So, okay, so I can now say that the psychological, take note, psychological, not historical. The psychological resistance of green is now pegged at 4.50. Okay, and the immediate support is at 2.90. Okay, so that's what I do. That's what I do when I can no longer find uh, historical historical resistance for the stock. So what do? I plot the Fibonacci extension, the Fibonacci, and make it convert it from retracement to extension. Okay, then I choose the 61.8% extension as the immediate, as the next psychological, as the psychological resistance of the stock. Why 61.8%, perhaps you ask? Well, classical interpretation or classical belief says that this is the golden ratio. 61.8% is the golden ratio. And this word golden ratio, this is not the first time that we did not hear the golden ratio being 61.8% for the first time in the stock market. High school statistics subject, I already heard this word that 61.8% Fibonacci extension is the golden ratio. I heard this way back in high school mathematics, high school statistics, or perhaps they already taught this to me back in elementary. Perhaps I wasn't just listening. Okay, so there you go. Now let me just give some feedback regarding the position of the price of green as far as the moving averages are concerned. Okay, let me plot the 200-day moving average as well. So we have 10, 50, and then let's make this 200. And let's change the color to blue. Okay. There you go. So this is the normal view of the chart of green. We now see the blue line, which is the 200-day simple moving averages. Okay, green is both moving, enjoying its movement inside the short-term bullish and long-term bullish territories. Okay, it looks good. The position of the price above the shorter term SMA and the alignment of the shorter term SMAs above the longer term SMAs are an indication that green is moving inside both inside the short-term and long-term bullish perspectives or time horizon. Okay. Okay. Now for volume, the volume last February 27 was higher than the 10-day volume average of green. Okay. And then let's see this. Yeah. So meaning to say this ascending price might be able to continue knowing that it registered a significant volume, relatively significant as far as the volume's position above green's 10-day volume average is concerned. There's not much that we can derive from the sentiment of foreign investors because their participation on green is not that much compared to their transactions on blue chip index, on the blue chip stocks rather. Now MACD is about to cross above the signal line. Okay. Uh, Once it crosses above the signal line, then it will add up to the bullish momentum of green, especially for the traders who are technicians. When I say technician, I'm referring to traders who rely heavily on technical analysis. Okay. How about the risk level of green? With its historical volatility of 32.14% or 32%, I would say that green still has a risk level, a low risk level. Okay. How do you gauge the risk level of a stock based on its historical volatility? If the historical volatility score is below 50%, then it's a low risk level. From above 50 to 70, that's a moderate risk level. Above 70 to 100, that's a high risk level. Anything above 100 is an extremely high risk stock. And when you plot your historical volatility histogram, make sure that you change the moving average from its default to number 10. So I prefer 10 days as a smoothing period, just like the shorter term SMA that I prefer, the 10 SMA. Okay. So what's my overall sentiment on green? I'm bullish. I'm bullish on green, but despite that bullish sentiment, I suggest that you still respect your trailing stop loss. Okay, how do you calculate your trailing stop loss? This time I'm going to um, make it more specific on how you calculate your trailing stop loss. Thanks to Dietmar for asking this clarificatory question in our private clients forum. I was given the chance to really give specific details on what's your basis when it comes to calculating your trailing stop loss. Do you calculate it from your average price or average cost, or from the current price, from the entry price? So here's the thing. If the current price, or if your average cost or average price is higher than the current price of the stock, okay, the current price of the stock, then calculate your trailing stop loss from your average price or from your average cost. Now, if the price or if your average cost is already below the current price of the stock, then your basis for your trailing stop loss would be the current price of the stock. Okay, so just look on two things. It's super simple. Is my average price, is my average cost above the current price of the stock? If the answer is a yes, you calculate your TSL from your current price. Another scenario, is the current price below, or is the average price below the current price? If the answer is a yes, then you use your trailing stop loss. You use your current price as the basis for calculating your trailing stop loss. Okay, so there you go. If you would want to enter a new position on green, um, I would suggest that you observe you observe the volume within the first 15 to 30 minutes of trading. If you see a relatively higher demand as far as volume is concerned, then you can do a test buy. Okay, but be quick. This resistance at 3.50 might be considered as a selling spot for those who were able to enter a position on green at an earlier date. Okay, so take note of these possibilities. Okay, so that's it for green. Now let's talk about the next top gainer as of February 27. So we got house. Okay, for house. Okay, I think the other day I already plotted the Fibonacci extension for house as well. So let's take a look. So as you can see here, I'm using this magnifying or zoomer. I'm zooming in just to be able to drag the stock, the chart down or in a downward direction. Because if you're not going to zoom it in, no matter how you drag it to the bottom, going to the bottom, it will not be dragged. So that's why I'm using that. Okay, so then the psychological resistance of green is now pegged at 15. Okay, currently yeah, it's 15. Well, assuming it will only be realized, this psychological resistance at 15, it will only be realized even when the price continues to soar above 12.60, the 61.8% Fibonacci extension. Okay, that's the golden ratio again. So as we can see here, uh, apparently traders of house retreated when the price drew closer to 12.60. Okay, meaning to say these traders are now eavesdropping with each other, trying to check if there's anyone who's willing to buy a significant chunk of stocks, perhaps above 12.60 or somewhere above 12, or not 12, somewhere above 12.30. Okay, so it's still a matter of volume again. Uh, if and when the volume will pick up, or will start to print daily volumes above its 10-day volume average, then the probability of it hitting or kissing the the historical resistance at 12.60 uh, will be higher. But until then, if the volume will just continue to print daily volume bars that are, that looks topsy-turvy, meaning to say they go above the 10-day volume average today, and they go down below the 10-day volume average the next day. If they just move sideways, then it's highly likely for House to just continue trading the range. What range? 11.10 to 12.60. That's the range. Okay. Um, Watch out for the position of the price above the 10-day simple moving average as well. For as long as the price is above the 10 SMA, then there's still a chance for the price to, not to register a distance that's too wide below 12.60. But once it goes below the position of 10 SMA, then it could be the start uh, of us seeing the price drawing closer to the support at 11.10. Okay, let's zoom it out now. So we can check if the shorter term SMAs are still above the longer term SMAs. And they are. Okay, they are. After all, the house has made it to the top 5 gainers as of February 27. Now, let's take a look at the foreign investor sentiment. Although these net foreign selling bars look so towering, look so huge or tall, if you're going to take a look at the total value of these net foreign selling bars, you would see that they only range around below 1 million. You got 6 million, and then you got 4 million. They're not as significant as the net foreign investors participation on the index stocks. Okay, so here now, so I'm not going to factor in the net foreign investor the foreign investor sentiment uh, with my overall sentiment on house. Okay, now for the MACD's position, oops, I think MACD has started to cross not above but below the signal line. Okay, so it's all the more for those who managed to enter a new position on house as early as the last week of January 2019, or probably in the first few weeks of February. I would suggest you stick with you be alert. Be alert on where your trailing stop loss is, especially now that MACD has crossed a few centimeters. Okay, a few centimeters below the signal line. Okay. And then, as far as the risk level of house is concerned, I can see that it still manages to maintain its low risk level with a historical volatility score of about 50%. Okay, so my overall sentiment on house is neutral to bullish. Neutral to bullish. Why neutral? Because I can still see a possibility of it just, trading the range. If and when, it's a conditional clause. If and when the volume continues to register topsy-turvy daily volume bars. Okay, that's it. Now let's move on to the third top five gainer. So the third stock is STR. Okay, let's plot the support and resistance levels of STR now. Okay, that's where the support is. As you notice here, I'm not already concerned about the precise point when I plot These are horizontal lines. So there you go. There's no need to be precise, by the way. For example, some of you might might want to ask, GC, why did you plot it at 7.03? Why don't you just plot it at 7.00? Well, it's okay. We're just after the range, not the precise point. Okay, somewhere there. Okay, I'm not going to plot that horizontal line. So anyway, all right. So the immediate support that I see on the chart of STR is pegged at 4.83. Resistance is at 7.03, but I'd rather eye on 8.54 as the immediate as the immediate as the major resistance rather. Okay. Now I hesitated to plot a horizontal line somewhere here because I think there's no need to do that. Why? We can see the intersection between the 10 SMA and 50 SMA, the green and the red line here. So we can use that as a midterm support somewhere at 5.40 for STR. Okay, we can see that intersection already. And I think it's close to, yeah, it's close to the bottom of these two candlesticks here, that intersection. Okay. So again, resistance is at 8.54, immediate support is at 4.83 with the midterm support at 5.5, 5.40 to 5.5. Okay. Now when it comes to the alignment of the moving averages, we can see here that while STR is already moving inside the short-term bullish territory, it has a lot of things to do for it to regain its uh, uh, long-term bullish position above the 200-day SMA. Okay, so it's not yet completely out of the woods yet. As far as staying above the long-term bullish long-term horizon is concerned. Okay. Nonetheless, the volume it registered on February 27 as of market closing was so significant that it managed to inch above, way higher than the 10-day volume average of STR. If this kind of volume will continue, then it will be relatively easy to pierce or to break out above 7.00 continuously. Okay, but if the aggressive volume dies down, then there's a possibility for STR traders to consider 7.00 up to 7.10 as a selling area, or 7.20, 7 to 7.20 as a selling area. If the volume dies down and if it does not uh, follow up or continue the same level of volume that it registered yesterday. Okay. Now for the foreign investors participation, it's not significant as well. It did not even make it above 1 million mark. The net foreign buying yesterday was only about 300,000 pesos. So I'm not going to factor in the stance of foreign investors in my overall sentiment for STR later. Now for the MACD, MACD is still enjoying its position above the signal line, as well as the position of the price above the 10-day simple moving average. So this is a bullish, that's 1 point for the bulls for me. Now when it comes to the risk level of STR, I would say that this stock is already trading inside the high risk level. Why? Because it already has a historical volatility score of 81%. Okay. My overall sentiment for STR is neutral to bullish. Why neutral? Because again, there's a possibility for STR traders to consider 7 to 7.20 as a selling spot. When? Well, if and when STR fails to register a follow-up or a continuation of its daily volume above its 10-day volume average. So it's always, for me, it's always about volume. If the candlestick is green and the daily volume is above the 10-day volume average, then there's a high probability for the ascent in price to continue. Now, if the candlestick is green but the volume bar for that day is below the 10-day volume average, then there's a tendency for the price to just move sideways. Okay, another scenario. If the candlestick is red and the volume is above the 10-day volume average, then there's a high probability for the price to continue moving downward. Last scenario. If the candlestick is red but the volume is below the 10-day volume average of the stock, then there's a probability for that stock to recover soon. Okay, to bounce away from the nearest support level. Okay, that's the association of the price with volume. So my overall sentiment, like what I mentioned a while back, is neutral to bullish on STR. If you already have a position, if you are already holding a position on STR, as always, manage your trailing stop loss. Okay, manage your trailing stop loss. Although First Metrosec announced that it will be employing, or it will make the automatic stop loss feature available to the market sometime in 2000, this year 2019. We still don't have that one yet. So until First Metrosec Pro deploys the automatic stop loss feature, I suggest you should have the time to monitor the price fluctuation of your stock if you would want to engage into short-term trading. Okay, there you go. Now, if you don't have a position in STR, is it wise to buy near 7.0? Well, again, monitor the demand for this stock within the first 15 to 30 minutes of trading, or within the first hour of trading. If you see a strong demand to buy the stock above 7.00, then it's not a bad idea to consider doing a test buy. Still a test buy, never go all in. Okay, never go all in. Now, if it goes down, if it inches close below 6.80, then I would suggest you monitor the price near 5.50, 4.8 to 5.50. If the price goes below 6 point, again, if the price goes below 6.6, again, if the price goes below 6, rather, if it goes below 6, I would suggest you monitor the price within this range. What range? 5.5 to 4.8. Okay, this range. Let me draw that. I think it's better to draw a rectangle. This. If the price goes below 6.00, monitor the price somewhere here. 4.8 to 5.5. Okay, there you go. Okay, so that's it for STR. Now let's move on to the fourth stock that made it to the top 5 gainers list as of February 27. So we have HVN. So these are many Villiers stocks, right? Villiers stocks. For HVN, okay, I have some pre-plotted horizontal lines or Fibonacci extensions in here because I wrote something about HVN yesterday. Okay, let's magnify this one so we can drag it to the bottom. Okay, so it's quite high for me. Okay, the resistance that I'm seeing here is at 400. Oh, not 400 because we have to. It's not. It closed yesterday at 400. There you go. So the resistance that I'm seeing here is at 633, but I'm not so positive that HVN will hit that level in the near future, at least in the first few days. I don't think, although it was so aggressive yesterday, it jumped from 360 or 380 something to 500 plus. Was it 500 plus? Let's take a look. Yeah, 540. I don't think that's going to happen every day for the next few days of this week. So still manage your consider consider this one as your 540 as your historical resistance for HBN. Okay, and your immediate support, I choose to I choose 317 or 320 as your immediate support for HBN. Okay, right now is moving at 415 already, but we still the volume bar is still relatively low, so we can judge yet if we are seeing a continuity on the price of HBN here. Now, as far as the foreign investors' participation on HBN, yes, on February 27, I would say that it wasn't much as well. Okay, it wasn't much, so I'm not going to factor in the participation of foreign investors in my overall sentiment for HBN later. Now for MACD, of course, when the price soared so high, you can expect that the MACD will um, cross erratically. No? It will erratically cross, or not erratic. That's not the adjective that's proper for that scenario. It will aggressively move or cross above the signal line. Okay, when the price, especially when the price moves above 10%. If the day change is above positive 10%. And because of its steep price movement on February 27, of course, the risk level jumped inorganically, okay, from low risk to moderate risk. Okay, that was the jump. So, for newbies, when it comes to short-term trading, I would suggest look elsewhere. Do not be tempted to trade stocks that jump from one risk level in one day to another risk level. Okay, from low risk to moderate risk, or from low risk to high risk just in one day. Avoid those stocks for now. It's not because they are bad stocks. It's just because their behavior, the showcased behavior of that stock, is not appropriate yet for a newbie investor or a newbie trader like those of you who relatively consider themselves as newbie traders. Okay, you stick with the low risk stocks for now, or monitor their price movement, study their behavior, the behavior of those stocks. Okay, so my overall sentiment on HBN is I'm actually bearish, because with that kind of price movement without any supporting market disclosure or any news where we can relate the movement of that huge movement in price, then it's hard to get this bullish conviction that there will be that the ascent in price is sustainable. So I'm not seeing any domestic news or anything that would make me uh, maintain a bullish stance on this stock. Okay, so it was just a technical price movement yesterday. It was not backed with any fundamental uh, reason. So just ride on the momentum, and if you manage to ride onto the momentum, like the article that I posted yesterday inside our private clients forum about HBN, uh, you should have already sold your position on HVN when it hit somewhere between 4.80 to 480 to 550. 480 to 550. You should have already sold your position within that range yesterday, especially if you managed to enter a new position below 380. Okay. Now, if you entered a new position on HVN when it was above 500, accept my condolences. Okay. Okay. You don't chase the stock all the way to the top. Okay. Especially when you do short-term trading. I myself don't buy at the close. I don't do that. The time frame that I'm checking when I do short-term trading is the first 15 to 30 minutes, sometimes the first 90 minutes of trading. That's where the momentum is. Anything after recess, you can consider that the price that the dust has already settled down after recess, and then the dust resurfaces within the within the next within the last 30 minutes before market closing. So that's it. When I do short-term trading, I look on the first 15 to 30 or sometimes first 90 minutes of trading. That's where I make buying decisions. Now, when it comes to long-term investing, I do the opposite. I don't buy within the first 15 to 30 or 90 minutes. I buy after recess between 1:30 to 3 o'clock. 1:30, sometimes 1:30 to 2:30 or sometimes 1:30 to 3 o'clock. Okay? The between the time frame between the whole day trading activity. That's where I buy when I do long-term investing. Okay? So I just wanted to share that with you. Now, um, yeah, I'm bearish on HVN because of the lack of fundamental reason for me to say that its ascent above the 500 level will be sustainable. Okay. Okay. So the last stock that made it in the top 5 gainers list is IMI. Okay, semiconductor company. Okay. So I have already pre-plotted here some horizontal lines. I think I talked about IMI in my previous uh, perhaps some of you posted a question about my or a request for my latest technical analysis on IMI in our private clients forum. Okay, let's remove the background color. Okay, so IMI, what do I say about IMI? Yesterday's ascent in price was supported with volume as well. So the volume as of February 27 is above the 10-day volume average of IMI, and the price also managed to inch above the 10-day simple moving average. So technically speaking, IMI is already moving inside the short-term bullish territory. But although the price is also above the 200-day SMA, this is not yet the perfect picture that I would want to see for me to say that there's a confirmation for me to say that there's a confirmation that the stock is moving inside the long-term bullish territory. Why? What's the kind of picture that I would want to see? I would want to see on IMI. I prefer to see the blue line below the red line. So it should be the green line above the red line and the red line above the blue line. So green, red, blue. Okay, right now it's still blue, green, red. So we would want this blue line to cross below the green line, and then it will we would want to see it crossing below the red line too. Okay, so there. If the volume will continue to register above, if IMI will continue to print volume above the 10-day volume average, then there's a possibility for IMI to revisit the resistance at 13.68 or 13.70 to round it up. Support is at 11.70. Okay, 11.70. Um, for the risk level of IMI, it still has the low risk level. Okay, low risk level. So I'm bullish on IMI because the price is managed to maintain its position above the 10-day simple moving average, and SMA is about to cross. It's about to cross above the signal line. So there will be another point for my bullish sentiment on IMI if the volume on February 28 will be above the 10-day volume average of this stock. Okay, there you go. We also do hope to see the same strength of net foreign buying coming from the foreign investors. We hope to see similar size, if not bigger, net foreign buying, so that we will get another point for the bulls, another point for that will add up to my bullish sentiment towards IMI. So my overall sentiment on IMI is bullish. For those who have managed to enter a new position in IMI, perhaps, where did we spot that confirmed buy signal for IMI? Here. This here. This is the valid buy signal for IMI as far as my 10 SMA and MACD combo is concerned. It was dated 11/26, November 26, 2018. This was the valid buy signal. And if you applied 5 or maybe 10% risk tolerance level on IMI, you should still hold your, I suppose you're still holding your position on IMI. If you do, just follow your trailing stop loss so that you'll have a stress-free short-term trading experience. Now, for those who do not have IMI yet and are dilly-dallying or tinkering whether you will enter a new position on the stock or not, I would say uh, just do a test buy. Do a test buy. Okay. If let's say if you have 100,000 pesos, you're planning to allocate 100,000 pesos to trade IMI. I would say by divide that 100,000 into four tranches or maybe five tranches, and then you use the first one or two tranches for a test buy. Okay. Portfolio sizing. Be on top of your trailing stop loss. Do not forget risk management. Okay. Do not just set your eye high on the upside. Consider the downside as well. Because if there's a because if there's an upside potential, there will also be a downside potential. Okay, so don't be biased on your outlook towards a stock. Okay, that's why I am giving you my sentiment. That's why when I give you my overall sentiment, I follow it up with what you're going to do if you already have a position in that stock and what you're going to do if you're still in the planning stage on whether you will buy the stock or not. That's why I'm giving you those two scenarios every time. Okay? All right, so I think that's all for the top five gainers for February 27. So we discussed green, house, STR, HVN, and IMI. Now let's go on to the top five losers as of February 27, 2019. So the first stock that I'm going to discuss is PLDT or TEL. Let's see. Okay, who can tell? Okay, I would like to draw a Fibonacci X a retracement for TEL for us to see a better historical support for this stock. Or let me try changing the chart from daily to weekly. Okay, it's too far to the left. Let's change it to 1 month. There you go. On this 1 month chart, on this 1 month chart, support is at 710. 710. It could be somewhere here as well, which is in confluence with our 61.8% Fibonacci retracement. Where was that? At 838. Okay, so let's move this back to 1 day chart. Okay, let's zoom it in so I can drag to the bottom. There you go. So the support that I'm seeing on TEL is at 8 point. Let's move this down so that it's aligned. Or let me just delete that one since we already have a Fibonacci extension retracement here. So the support that I'm seeing on TEL is at 838. Let's make it a range 838 to 850. So if you do have TEL, what made you think that you should still have TEL all this time? Okay, no, kidding aside, if you have been asking for my technical analysis, the only recommendation that I would give every time, that I would give to you every time, on TEL is not to touch the stock yet. Do not touch TEL yet. With what's happening on its price movement, I would rather just add TEL in my watch list, and maybe I will have the interest to check if it's already too cheap to be ignored once it reaches the 830 to 850 level, or maybe once it goes below 900. Okay, but for now, I'd rather monitor other stocks than PLDT. That also explains why it's not in our long-term investing watch list. It's not included in my investment guide for long-term investing because in its sector, between the two, PLDT and Globe, Globe is faring better than PLDT. But the reason why I did not add Globe in our investment guide for long-term investing is that during that time there was there wa- there it was a noisy market when it comes to it was a noisy market for the telecom industry. During the time that I was checking or filtering which stocks I should put in my investment guide for long-term investing. So I do not want to touch the telecom industry yet. I'd want to focus on other sectors except for the other than the telecom industry, or except for the telecom industry rather. Okay, and that's just my personal sentiment based on my financial goals, investment horizon, and risk tolerance. Although it's not a bad idea to enter the telecom industry, but if you were to ask me which is better, Globe or Tel, fundamentally and technically speaking, I would choose the latter or the former, Globe. Okay, but our topic is Tel, not Globe. So let me give you now my analysis about Tel. So there you go. The support that I'm seeing is at 838 or 850 level. Okay, and resistance is at 1125 or 1100, yeah, 1120 or 1125. Okay, it's a bad chart for Tel. See this line, this 1125 level. Um, so many traders, I think they were expecting the price to hold above 1125 level because it was respected way back way back in June 2018. It was respected again sometime first in the first 1 or 2 weeks of February last year. It bounced away from the 1120 level, but sadly, last February 15, it chose to continue its downward direction. So the support at 1120 to 1125 level was disrespected, was not observed. And for me, it makes me all the more interested to just wait for PLDT to inch closer to 800, 830, 800 to 850 or 830 to 850. You choose 800 to 850, 830 to 850. It's the same range anyway, relatively speaking. Okay, now MACD. Do I still need to say that it's a bearish? It's a bearish position MACD wise, just by the looks of the MACD chart. Okay, it's in a bearish. This is what I call bearish convergence. It's in a bearish convergence with MACD. They agree to move bearishly within the same direction. And for the risk level, although it's a low risk stock, but this is the kind of low risk. It doesn't mean I believe in one of my answers in the private clients forum, or maybe in one of my videos, I said that not because a stock has a low risk level, it doesn't mean it's an automatic signal for you to consider that stock as a stock that is good for long-term investing or even short-term trading. Okay, take a look at the price direction as well and other factors. So in this case, while it has a low risk level, I'm not impressed by how its chart looks like. Okay, so Obviously, it's a bearish sentiment for TEL for me. If you have a position on TEL, oh my goodness, what did you see? What did you see that's so buyable about this stock? Just by looking at its chart, you know that um, investors are not yet so into PLDT yet. Okay, especially the foreign investors. They are net foreign sellers year to date. Year to the entire 2018, they were net foreign sellers, and the entire 2019 year to date, they are net foreign sellers as well. Okay, so there you go. So these foreign investors who bought huge chunks of PLDT back here, okay, it's it's possible that they were also the ones who sold their position when the price hits the low of 1070. This one. Okay, so it's a bearish direction. If you don't have TEL yet, don't enter a new position. If you have TEL, oh my, reduce your risk. If your emotions, uh, if you're having a hard time realizing your losses to this bad, quote unquote, bad stock, technically bad stock, trim your losses. Okay, trim your losses. Okay, and then you do better next time. You be on top of your trailing stop loss next time. Because if you enter the position on PLDT when it's in the last week of January 2019 and you are still holding a position on TEL up until now, it only means you bought TEL without a trailing stop loss in mind, without risk management in mind. So you should know better. You should now be able to do better next time. Okay? Now let's move on to the next top loser as of February 27. We have EEI. So when EEI registered a towering bullish volume and bullish candlestick last February 26, it retreated on February 27. So let's plot the support level first. Resistance rather. Okay. Left click. There you go. Let's pick another resistance above 9.80. There you go. So immediate resistance is now at 9.80. Immediate support is now at 8.90. So if the bearish if EEI decides to move to the southward direction, then watch out for 8.90 because that's a precursor to the next support level at 7.80. Okay, so monitor that level. Now if the price soars above rises above 9.80, then there's a possibility for the price to hit 10.53, especially if the ascent above 9.80 comes with a significant volume. How significant is significant? If it's above its 10-day volume average. Yesterday's red candlestick, or the candlestick last February 27, came with a towering volume as well. So meaning to say, the traders of EEI on February 27 were really decisive. They were decisive traders to sell to realize their profits on EEI last February 27. Okay, so if it recovers above 8.90, if it maintains its position above 8.90, but with a volume below its 10-day volume average, then there will be a chance for EEI to just move sideways or trade the range. What range? 8.90 to 9.80. Okay. Now, foreign investors are not having it. Despite the extremely and inorganically bullish price movement last Tuesday, Foreign investors did not have it. They sold. They did not buy. They sold instead. And yesterday they sold all the more. They sold all the more. And with its volatility ratio, with its volatility score of 127%, EEI has an extremely high risk level. Not for newbies. Okay, not for newbies. Do not add this one in your watch list. Choose other stocks if you are a newbie and you would like to try short-term trading. Now, if you still have EEI, let's say you bought EEI when it was below 8.90, uh, I think you should be fine. Well, of course, it's subjective. You should be fine subjectively, especially subjectively, and especially if the price movement is still above your trailing stop loss. But but as soon as the price moves below 8.90, I think it will fill the gap. It will gap down. It will fill the gap and re-enters where it was originally positioned within the range of 7.8 to 8.9. Okay, when it goes down 8.9. Okay. My overall sentiment on EEI is that it might just move sideways. So it's still a neutral sentiment. Although it made it to the top loser as of February 27, I don't have an ultimate bearish sentiment on EEI. I am neutral on EEI. Okay, neutral in a sense that um, traders may decide to keep it afloat above 8.90, but once they get tired of making it rise higher or inch higher above 8.90, they might consider again uh, uh, selling their position. So it's a game of volume once again. So aside from the price movement and aside from monitoring the position of the price above the simple moving averages, I would want you to take a look at the volume as well. Okay. In my volume histogram here, volume, click on the settings or format icon. I put in an MA length of 10 and then I check the show MA. This show MA, the purpose of this show MA checkbox is to show you these mountain-like background color histogram. So when I see that the volume bar is higher than this shadow, it means to say it's higher than the 10-day volume average of the stock. Okay, so that's my indicator. How does it look like when I uncheck that? Oh, of course, the shadow background will be gone. That's it. Let's check it back. There you go. The default setting is not set to 10 SMA, 10 moving average. I think it is originally set at 9, so I put in 10. Why 10? Perhaps you want to say, JC, why 10? Why not 7? Why not 12 or 11? Well, 10 moving average, 10-day moving average for me is like 2 weeks worth of trading. 5 trading days in a week. So two weeks you get 10 days. Simple arithmetic, right? Okay. So my overall sentiment on EEI is neutral. If you don't have a position yet on EEI, what should you do? Test buy now? Wait some more? If you don't have a position on EEI, I would say, and you are a newbie trader, I would say, wait for this stock. Observe some more. Observe some more because I don't see enough clarity yet on whether EEI traders would want to buy above 9.8 once again. I don't see any clarity yet on that. Okay. Perhaps if the price manages to inch closer to the the middle part of 8.9 and 9.80 with volume again, then I think that's the time that I would consider doing a test buy. Okay. Of course, you need to get some confirmations. You need to get some confirmations first on whether it's technically good to enter a new position on the stock. Okay? And you don't fret. You do not fret or you do not regret when you were not able to buy when the price was at 9.10. Let's say you bought at 9.40 because that was the time when you saw some clarities that traders really would want to trade EEI higher. It's okay to buy at 9.40 and miss the opportunity to buy at 9.10 because when it was at 9.10, you still did not have the clarities that you were looking for. Okay? Again, do not fret, do not regret. Keep in mind that hindsight is always perfect. Hindsight is 2020. Okay, so don't fret. Have a system in place. So that's it for EEI. Let's move on to the third top loser as of February 27. So we now have SMC. So for SMC, the price retreated. It did not succeed in registering a price above 179 or 180. Okay, 179. Yeah. So it was a failed attempt to soar above the resistance at 1.80. Okay. And the price is now while the position of the price is both above the shorter term SMA and the shorter term SMA are above the longer term SMA. The price is now starting to move below the 10-day simple moving average, and I can see here, you can see too, that the MACD line has already bent downwards, positioned to cross below the signal line. Okay, and the risk level of SMC with its historical volatility score of 52%, then I would say that this is a moderate risk stock. Foreign investors for the past two trading days are not interested on SMC. They were not interested on SMC for the past two trading days, but they were interested on SMC last February 22 as they bought 93 million worth of SMC shares. Okay, but not for the past two trading days. So they did not sell. No significant net foreign selling happened last February 27. So you can consider that those foreign investors who bought how much SMC shares? 107, 58. So those foreign investors who bought more or less 250 million pesos worth of SMC shares um, in the starting the third week of February, you can say that they have not vomited yet their shares. So they are still holding their position. Okay, so that's it. Uh, what's my overall sentiment on SMC? Am I bullish? Am I bullish? Am I still bullish? Am I now bearish on this stock? I would say that I'm still neutral to bearish on SMC. Why? Why neutral to bearish? Why neutral? First off, the price is still moving above 165. This is the golden ratio. Okay, so there's a possibility for SMC to draw closer to this line, but there's also a possibility for it to bounce away from the 165 level. Classical interpretation says that when the price goes down and hits the 61.8% Fibonacci retracement or the Fibonacci's golden ratio, um, most often than not, it's not always, okay, but most often than not, the price bounces away. It rebounds, okay. What's the percentage that it happens that way? No literature. There's no documented literature about the percentage that it happens that way. What they just say is that most often than not. So since it's most often than not and not always, then we should also consider the fact that it may not bounce away. It may continue the downtrend when it hits 165 pesos per share or the 61.8% Fibonacci's golden ratio. Okay, so I am neutral to bearish on SMC. If you already have a position on SMC and you managed to enter when did we spot our confirmed buy signal on this stock? That was in January 2, New Year, after New Year, January 2, 2019. That was when the confirmed buy signal was spotted as far as my 10 SMA and MACD combo is concerned. Okay. Now, if you have SMC, let's see here. Perhaps you sold your position. Perhaps you already sold your position before the Mac, before Mac, before February, before the first week of February 2019. You should have already sold your position, especially if you only have a 5% risk tolerance level on SMC. After the first week of February, did I see a confirmed buy signal as far as my 10 SMA and MACD combo is concerned? No more. There was no. Oh, there was one last February 18. That was a confirmed buy signal, February 18. This one. And if you bought here, and when the stock reached a price above 180, when it reached 180, and it's now at 170, I think you still have your position on SMC by now. Just be on top of your trailing stop loss, okay? Keep in mind the rules. Where do you base your trailing stop loss? On your average cost or on the current price? Average price or the current price? If your average price is higher than the current price of the stock, calculate your trailing stop loss based on your current price. No, on your average price. Now, if your average price is lower than the current price of the stock, calculate your trading stop loss from the current price of the stock. Okay? Now, if you don't have a position on SMC, what should you do? Do I recommend that you do a test buy or wait some more? I would say you wait some more, near 165. Does it only mean that you should only do a test buy once it hits, quote unquote, literally 165? No, that's not what I mean. That's why I said when it inches closer or near 165, still monitor the volume. If you see a demand, if the price drops at 160, let's say 168, but you see a rebound and that rebound comes with a heavy bullish volume, then you can consider doing a test buy at 167 or 168 if that happens. Okay, because there's already a support coming from the volume. Okay, you don't have to literally wait for the price to hit 165. Okay, I have to clarify that thing because I had a customer before who was literally waiting for the price to hit a certain price level before um, entertaining the thought of doing a test buy. Okay, so that's it for SMC. Now let's move on to GTCAP. Okay, let's take a look at GTCAP. Okay, for GTCAP, resistance is at 1065, support is at 839. Okay, and the volume was below its 10-day volume average. That explains why those red candlesticks it has not recovered yet after 3 consecutive days of having red candlesticks. Okay, so foreign investors are not also particularly interested on GTCAP, at least for this week, at least until not just this week, but in the entire February, they are net sellers month to date. Okay, and MACD is so bearish, and it has a risk level of low risk. If you do have a position on GTCAP, you should have already sold your position of course, it hits your trailing stop loss. But if your trailing stop loss is above 1000, the support level 1065, that's where you should have already sold your position, or maybe somewhere here, 1030. Okay, 1020 to 1030. You should have already sold your position on GTCAP. Okay, following your trailing stop loss. And okay, now if you don't have GTCAP, do I advise that you enter a new position now? No, not yet. Continue observing. Continue observing, especially that MACD is so bearish, and the 10 SMA has already crossed below the 50 SMA, and I don't see it changing any direction, changing its direction in the foreseeable, at least within this week until tomorrow. Okay. Okay. Why did I draw this horizontal line? Let's remove that. Okay. So my overall sentiment on GTCAP is bearish, not just neutral to bearish, but completely bearish on GTCAP. Wait for it to inch closer to 839 pesos, the support level here. Okay. Now, if it's somewhere between, let's say, if you see a rebound, if you see a rebound in price at around 890 pesos, and that rebound comes with a strong bullish volume, then as early as that, then you may consider doing a test buy within that level. Okay. So as always, if you have access, not if, because if you can listen to this video, that means you have access to our private clients forum, because this is an unlisted video that is only available to Equalist Analytics subscribers. Now, maximize your access to our private clients forum. Please post your request for our latest reading on the stocks of price volume and top 10 players. Okay? So that's it for GTCAP. Let's move on to the last top 5 top loser as of February 27. We have PHA. Okay, so for PHA, it seems that it manages, it's trying to stay afloat above 126. Actually, my support level here is at 119 or 120. Okay, based on the Fibonacci retracement that I plotted here, I just drew a line here at 120. This was at 126, because that can be considered as a historical support as well, because it managed to stay above 1.26 back then, or 1.24, 123 to 124 here. Okay. So, but generally speaking, considering those and that of Fibonacci, I would say that the major support here is at 1.20. So let's remove this one. Let me just round it up. Okay, 1.20. That's where I would want to place the immediate support for PHA. Now, PHA is much closer to its support level than to its resistance level. So, and take a look at this. It's also moving below its 10-day simple moving average, and I see no sign of a reversal on the trend of MACD vis-a-vis with the signal line. Foreign investors are not particularly interested on PH8 as well. And volume-wise, volume is still below. Yesterday's red candlestick was supported with a volume that was above its 10-day volume average. That was not the kind of combination that we want to see. Okay. Now, risk level wise, PHA has a high risk level. It's a high risk level. It's a high risk stock based on its historical volatility score of 81%. So, what's my overall sentiment on PHA? I remain neutral. I am neutral to bearish. Neutral to bearish on PHA. Why neutral to bearish? Because I can still see a high tendency for PHA to just move sideways, to just trade the range. What range is it? 1.20 to, is it 1.20 to 1.70? Probably not. Probably the range would be 1.50 to 1.20. Okay. If, again, it's a conditional clause. If the volume continues to if the stock continues to print volume below its 10-day volume average, so When that happens, when the daily volume is just below the 10-day volume average, then there's a probability for PHA to just trade the range. What range? 1.20 to 1.20 to 1.50. Okay? Now, if the volume continues to if the volume goes above its 10-day volume average in favor of a red candlestick, okay? Then there's a probability then that the probability is high for PHA to go below 1.20. Now, if the price is in a green mode, meaning green candlestick, and the volume is above the 10-day volume average, then there's a chance for PHA to go out of the range, go out of 1.20 to 1.50, that range. Okay, there's a probability then for this stock to go out of that range, to break out above that range, going to 1.70. So I'm neutral to bearish on PHA. If you hold a position on PHA, the question now is, when did you buy PHA? If you bought your PHA in the first week of February, I'm sure you have not been your trailing stop loss perhaps is still intact. Perhaps your trading stop loss is still below the current price of the stock. But if you bought your position on PHA in the third week of January this year, I think you should have already sold your position when the price went below 1.42 or 1.40. Okay? Again, respect your trailing stop loss. There's no better suggestion, better idea, better recommendation, more logical answer than respecting your trailing stop loss. Okay? Now, if you don't have a position on PHA yet, and I would say continue monitoring this stock. Do not rush into the idea of entering as early as the price, entering to the price right now. If the price touches 1.20 and the volume is still below the 10-day volume average or above the 10-day volume average, again, wait for the stock. When that happens, there's a tendency for there's a high probability for PHA to go below 1.20. Okay, so when that happens, put your fence, okay? Put your fence somewhere near 1.0. That's where you need to wait for PHA. Once it goes below, once it breaks down below the support level at 1.20, try to catch it at 1.0. Okay? And when it draws closer to 1.0 and there seems to be no signs of it stopping the downward direction, then wait for it at 0.86. But, 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 if the price draws closer to 1.20 and you see that there's a demand coming from the traders to buy the stock up, especially when it comes with when you see a green candlestick and volume is above the 10-day volume average and it closes to 1.2, it draws closer to 1.20, then consider doing a test buy. There's a big probability then that traders of PHA think that the price is already too cheap not to be bought again at 1.20. Okay, but please review this video over and over again. Every time I say something, it's always a conditional statement. The if and when. Okay, you have to consider those as well. So again, today I was able to share with you my overall sentiment and latest analysis with my recommendations for the top 5 gainers and top 5 losers as of February 27, 2019. So just a recap, I discussed with you these top 5 gainers, namely Green, House, STR, HVN, and IMI. And for the top 5 losers, I discussed TEL, EEI, SMC, GTCAP, and PHA. So these are the top 5 gainers and top 5 losers as of February 27, 2019. So every day, by the end of each trading day, probably in the evening, I'm going to publish my daily top 5 gainers and top 5 losers analysis. This is our new way. This is my new way of helping short-term traders have a data-driven strategy on whether you should go or not on any of the top 5 gainers and top 5 losers of today, of the current trading day. If you have questions, feel free to ask in our private clients forum. Again, my name is JC De Guzman, founder and chief technical analyst for Equalist Analytics. Thank you and have a good day.